By the end of this segment, you'll be one step closer to mastering the art of investing. So grab your notepads because we're diving in. What is the stock market? Well, the stock market is like a busting marketplace where investors buy and sell shares of companies. It is a crucial pillar of the economy, allowing businesses to raise capital, to grow, and innovate. For investors, it's an opportunity to own a piece of these companies and potentially profit from their success. Some key terms to remember include shares and bonds.
Stocks and bonds are commonly mentioned in the same breath, but they're very different investments. To understand their differences, let's start with simple definitions. A stock is a partial ownership of a company. It's considered an own investment, so when an investor purchases stock, they're actually buying a piece of the company. A bond is a loan investment, which means an investor is actually loaning money to an entity, like a company, government, or municipality.
How does the stock market work, you ask? The stock market operates on the concept of buying and selling stocks through exchanges like the New York Stock Exchange or NASDAQ. Prices are determined by supply and demand. When more people want to buy a stock than sell it, the price goes up, and vice versa. Factors influencing stock market prices include company performance, economic indicators, interest rates, inflation, and employment data. Why invest in the stock market? Investing in the stock market can lead to substantial financial growth over time. Here's why: wealth accumulation, diversification, and long term growth.
I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I've never felt that I knew it, and I've never felt it was important. We're almost always a buyer of stocks, and we're a more aggressive buyer when they're going down. I mean, I feel much better when they're going down. I think every business should be run as efficiently as possible. And some are and some aren't. We try to buy the ones that are. I mean, I bought my first stock in April of 1942. I was 11. Pearl Harbor had happened 3 or 4 months earlier. We were losing the war. I mean, if you want to talk about a bad outlook for the country's not going to go away. The plants aren't going to go away. The people aren't going to go away. The talents aren't going to go away. The country will grow in value over time.
Growth. What should you know before investing? Before you dive in, consider these essential tips. Make sure you set clear financial goals, investment goals, assess your risk tolerance, and understand how much risk you can handle, and invest in a mix of stocks, bonds, and other assets to spread risk.
Maybe you've heard of risk tolerance, but what does it actually mean? Basically, it's how comfortable you are doing something. Some people get a rush taking a lot of risk, like a rock climber hanging off a cliff. Others play it safer, like a hiker sticking close to the ground. The same goes for investing. Higher risk may come with higher reward. Someone with a high risk tolerance is okay with knowing they might win or lose a lot by owning, say, meme stocks, crypto, or a lot of stocks in just one industry like tech. Someone with a low risk tolerance might sleep better at night with a savings account, CDs, and bonds. Risk tolerance can change over time. You might have a higher risk tolerance when you're younger and have time on your side to ride out stock market lows. There's no right or wrong level of comfort. It's all about knowing yourself and making decisions based on that.
To wrap it up, remember that investing in the stock market requires patience, knowledge, and a clear strategy. Seeking professional financial advice can provide tailored strategies to meet your goals and manage risk effectively. Now's the time to take control of your financial future. Let's make those investments work for you. Thank you for joining me on this journey through Stock Market 101. Stay tuned for more insights and tips on becoming a savvy investor. Please leave a like and subscribe, and don't forget to comment if you enjoyed the video. Stay tuned for more content on my YouTube channel. Bye-bye.